Hello, and welcome to this special edition of CUNA's Economic Update. I'm CUNA's Senior Policy Analyst coming to you from my home office. I hope that you and yours are doing well and staying healthy. Today we'll be considering COVID-19 and how it's hitting our most vulnerable populations hardest and what that means for their financial well-being. For credit unions, understanding the challenges that our vulnerable members are facing is critical to ensuring that we're crafting responses that best serve their needs. But this isn't just about members, it's about our vulnerable staff too. U.S. economic activity is at a near standstill due to the pandemic-generated shocks to the global supply chain and policies like mandatory social distancing, non-essential business closings, and stay-at-home orders that were designed to slow the spread of the COVID-19 virus. Millions of people have lost their jobs and we're facing unemployment rates we haven't seen since the Great Depression. We're talking about some serious economic dislocation, and we know that it's not evenly spread. This has all happened in a blink of an eye. If we think back to the beginning of the year, our economy was on fairly solid footing. We'd entered the 11th year of economic expansion, and we're looking at a slight slowdown in growth towards a long-term sustainable level. Yet in the midst of that, there were some challenges, including rising income inequality, the fact that nearly 40% of U.S. households are not able to cover a $400 emergency expense, and approximately 2/3 of workers are living paycheck to paycheck. This is concerning in good times, but in the context of a pandemic, inequality of income, wealth, and health, which plagues communities of color, and low-income communities, means that the pandemic is having a disproportionate impact on these groups. They're more vulnerable to crises. In the context of this pandemic, it's people of color, specifically Black, African Americans, Hispanic, Latinx, Native Americans, women of color, and immigrants, as well as low-income individuals that are being hardest hit. So while all of us are being affected, people of color and low-income individuals are among the most vulnerable to COVID-19. Let's unpack this. When you start off with inequality in income and wealth, that means that the financial burden brought about by COVID-19 will be unequal. The poorest are being hit harder than those who have more means. A recent Pew Research Center survey finds that 52% of low-income respondents said that someone in their household has lost a job, taken a pay cut due to the coronavirus outbreak, or both. This compares to 32% of upper-income respondents. We also know that typical households of color face income and wealth disparities. The latest data we have is that the typical white household's wealth was 10 times that of the typical Black household, and over 8 times that of the typical Hispanic household. This increases the Black and brown households' financial vulnerability and makes it more challenging for them to weather economic downturns. Educational disparities means that the less educated will tend to be in low-skilled and low-wage jobs. Approximately 25% of our workforce are in these low-wage jobs, and a significant percentage of these workers are people of color. In the context of the pandemic, these jobs are divided into 2 groups. Workers in essential jobs who are often putting their lives at risk because they're exposed and may lack the proper personal protective equipment. Here we're talking about bus drivers, grocery store workers, social workers. Approximately 1/3 of essential workers are women, and a high percentage of these are women of color. The other type of job is non-essential. In this case, workers are putting their livelihoods at risk. Of course, there's the stimulus check, and for those that have access, unemployment insurance or even support through the SBA's payment protection plan may help to mitigate some of these hardships. Finally, health disparities mean that different groups get sick and die at a higher rate. People of color and low-income individuals, particularly from rural areas, faced significant health disparities and had lower rates of health insurance and access to the health system before the crises. So we know that they are much more vulnerable now. Let's take a look at the labor market, which is probably the most visible sign of COVID-19's economic impact, and it offers us the most real-time data. Over the last 5 weeks, 26.4 million workers filed for unemployment. These are sky-high numbers. To put these numbers into perspective, 9 million jobs were lost over the course of the Great Recession, and the previous high for initial unemployment claims in 1 week was around 700,000, which happened in October of 1982. Based on the weekly unemployment claims, CUNA is estimating an unemployment rate of 20.6%. This is the highest level since 1938. This is not the official Bureau of Labor Statistics unemployment rate, which is based on a monthly survey that occurred too early in March to really capture the mass layoffs that occurred later in the month and into April. We're forecasting that unemployment may reach as high as 25% in the second quarter. And if we consider the impact of ESVA's payroll protection program, which was launched a couple of weeks ago and is really aimed at least in part, keeping workers in their jobs, then we expect this number to decrease significantly. However, we're forecasting that unemployment for the year will still end up around 15%. That is higher than the highest level of unemployment during the Great Recession, and it means that we will still have 25 million people out of work in December. These 25 million unemployed will have long run out of unemployment insurance and will be in a position where they're not able to pay their rent or mortgage. They're maybe facing eviction. They're probably taking or maybe taking a hit to their credit score, which certainly will make access to affordable credit later on more difficult. This is incredibly stressful, and we know that financial stress can have lasting effects on people's mental and physical health. Here's a chart of the largest job losses by industry as of the latest report in March. Workers in the service sector were really the first to be hit. Based on Bureau of Labor Statistics data, we can see that the largest job losses have occurred in low-wage jobs. Reports suggest, though, that there is a second round of job losses that are beginning to impact higher skilled workers such as lawyers, healthcare workers that are not directly involved in fighting the pandemic, and government workers that are being furloughed. So up until now, we've really been looking at aggregate numbers, but we know that different groups are unequally affected. The Pew Research Center did an analysis of high-risk industries and found that women, Black African Americans, Hispanic, Latinx, and young adults are particularly at higher risk of losing their jobs from COVID-19. These groups tend to work in the service sector in low-wage jobs. They're servers in restaurants, bartenders, they work in retail shops, hotels, childcare, travel, leisure, even entertainment-related jobs. These are jobs that cannot be performed remotely. It's not surprising then that the latest unemployment figures from the Bureau of Labor Statistics shows that overall unemployment rates for Black African Americans are at around 6.7%, and Hispanic Latinx are at around 6%. These are certainly higher than those for Asians, which came in at around 4.1% and 4% for whites. Of course, these figures are limited because they're based on a survey, as I mentioned before, that took place before the massive layoffs started. We expect these trends to be exacerbated in the coming unemployment reports. For more real-time data, though, a recent survey by the New York Times finds that Black workers are twice as likely as white to report losing their jobs because of the crisis. And the survey also finds that Hispanic workers and low-income workers of all races and ethnicities report significantly higher rates of job loss. In addition, there was a poll conducted by ABC News and the Washington Post that support the New York Times survey findings that finds higher rates of job losses among low-income workers, people of color, and women without college degrees. These groups are at risk because they tend to work in high layoff risk industries, but there's also research that shows that these groups are at the top of the layoff lists across the board. This is despite the fact that there is evidence that companies that did remain inclusive during the Great Recession did better financially during the recession and after it. There is research out of Columbia University that projects that the high unemployment levels that we're seeing will increase the poverty rate for all and widen racial disparities. The researchers project that poverty may rise twice as much among Blacks as among whites. We can see that here. If you look, the February 2020 estimate for poverty for white households was probably just over 8%. And if we look at the scenario of poverty, or unemployment rather, being 20%, we see that poverty for whites rises just under 10%, so about a percentage point. If you look at the Black population, which is this darker or this lighter purple dot here, we see that in February 2020, the estimate for poverty was around 20%, but in this 20% unemployment scenario, poverty rises to just under 24%. So certainly double that, the level of increase of white households. This research also finds that poverty is likely to rise disproportionately among children, and you see that here as well, right? So in this 20% unemployment figure, you'll see poverty rising significantly for children. And this is especially worrying because there's been a lot of research on how childhood poverty is a trauma that has lifelong effects, including worse health outcomes, worse education outcomes, lower earnings, and higher incarceration rates. So these negative effects may be with us for a very long time. Now, of those that are still employed, the New York Times survey indicates that Black and Hispanic workers are much less likely to report that they work from home, meaning that by continuing to work, they're risking exposure to the virus. If we take a look at the essential workers, we know that approximately 1 in 3 of these essential workers are women. The majority of these women work in the healthcare sector, as you can see here. So right there, as well as the social work industry. Nearly 5 million of these are working in jobs that earn less than $30,000 a year, and 83% of these are women, and half of them are non-white. Being able to stay at home and social distance is a luxury. This is the finding of a recent analysis that took a look at people's movement using cell phone data. This research highlights the socioeconomic divide and how low-income groups, which include people of color in a very big way, are more vulnerable during the crisis. Specifically, this analysis shows that social distancing is harder for poorer people and people of color because they tend to work in parts of the service industry that require face-to-face interaction, where working remotely is not an option. So if you take a look at the chart, you'll see that people of all income groups are moving less than they did pre-crisis. So this is kind of where folks were at pre-crisis. And then you see this dip happening, probably the first 10 days or so of March. By March 16, which is when President Trump basically asked people to stay at home, you see that sort of the wealthiest groups, which is this blue line, were staying at home. There was like 50% less movement for this group. It took 3 more days for the poorest to actually reach that level. And the wealthiest have maintained a lower level of movement throughout and earlier. So they've been able to social distance and stay at home for a longer period of time. You're seeing those in the lower income groups actually start to move a bit more. And so the wealthiest actually had a bit of a head start on social distancing, and they can do this because they benefit from job security. They benefit from the ability to work remotely. They've been able to maintain this lower level of movement, which has helped them flatten the curve and slow the rate of spread in their communities, while low-income folks have not been able to do this as well. So another study highlights the socioeconomic divide when it comes to COVID-19. This study by the Federal Reserve looks at the relationship between financial distress, which they measure as being 30 days or more delinquent on a credit card bill, and vulnerability to getting and dying from COVID-19. What they found is that initially the virus spread faster in areas with the lowest financial distress, and we can assume that these are generally higher income areas. And it probably spread faster in these areas because of more exposure to international travel and that sort of thing. But the pattern has now switched and is spreading faster in areas of higher financial distress. We can read that as lower income. And this is translating into more deaths. So this is what it looks like. If you can see, the areas of higher financial distress is quintile 4 and 5, so this kind of mustard yellow and probably gray, and they really start to pick up around here, and you start to see a difference in terms of a faster rate of infection levels and more deaths in these two quintiles as compared to quintile 1 and 2, which are the higher income, lower financial distress areas. And the story here may plausibly be that it's more difficult for quintiles 4 and 5, the poor, higher financially distressed areas, to social distance, as we saw previously. They may be working in frontline jobs without the proper personal protective gear, which raises their risk of getting sick. And when these folks get sick, it might be difficult to take time off work. They may have pre-existing conditions, and it's likely that they don't have health insurance. So this, again, raises the probability, the likelihood that they may actually die from the disease. We also know that place matters. Another piece of this puzzle is that a history of segregation has resulted in people of color living in densely populated urban areas where the coronavirus is more spread, raising their likelihood of getting the virus. Preliminary statistics from several states and big cities like this data that we're seeing here from New York City indicate that the coronavirus is infecting and killing Black, African Americans, and Hispanic Latinx at rates far higher than whites. Black and brown populations are more vulnerable from a health perspective because of structural environmental racism has resulted in significant disparities in chronic health conditions, including a higher incidence of diabetes, asthma, heart disease. We even see higher levels of maternal mortality among people of color. In addition, Black and brown families tend to live in multi-generational households. So you might have young people who may get infected. They seem to be doing okay, but they bring it home to grandparents who are more at risk of devastating health impacts. Compounding this are healthcare disparities, which we talked a little bit about before. These include a higher risk of being uninsured, less access to care, language barriers, and the list goes on. In addition, we're also learning that rural populations, especially the low-income populations, as well as Native American populations, are being hit hard. They're facing healthcare deserts where the nearest clinic or hospital is miles and miles away. Many households will see their income decline as a result of COVID-19. The Pew survey that I mentioned earlier finds that 52% of low-income households have either taken a pay cut or lost a job or both due to the pandemic, as compared to 42% of middle-income households and 32% of high-income households or upper-income households. The Pew survey also finds that a higher percentage of Black, African American, as well as Hispanic Latinx have either taken a pay cut or lost a job or both due to the pandemic, and here you see that, right, versus white households, right? Even before COVID-19, the majority of Americans were living paycheck to paycheck. They were barely able to keep up with housing costs, childcare, student debt, medical bills, and food costs. And they certainly didn't have the 6 months of savings set aside for a rainy day. In fact, that same Pew survey finds that 77% of low-income Americans say that they won't have enough money to cover 3 months of emergency expenses compared to 23% of high income. And over 70% of people of color won't have enough money to cover 3 months of emergency expenses compared to just under half of white households. Finally, the survey finds that 1/3 of low-income households won't be able to pay some of their bills this month. The Pew survey asked respondents what they would do with their stimulus checks, and 71%, here we go, 71% said that they would use it to pay bills, while just 11% said that they would actually save a portion of it, right? The savings obviously is higher, the higher the income. A survey by Morning Consult for CUNA asked a nationally representative sample what financial solutions they would find the most helpful in the current context. The overwhelming majority of low-income Black and Hispanic respondents thought all of these options laid out here would be helpful, from delaying payments on the mortgages to small dollar loans with 3 month deferred payment, 90-day credit card payment deferral, as well as restructuring loans and mortgages to lower monthly payments. There was a slight preference for the first and last, that is delaying payments on existing home mortgages and loans, and restructuring loans and mortgages to lower monthly payments. Finally, we know that businesses owned by people of color tend to have weaker banking relationships. They've had a hard time accessing credit from traditional financial institutions and typically turn to friends and family for financing. While anecdotal evidence suggests that these groups have struggled to access the SBA Payroll Protection Program, or the PPP, through banks, the second round of funding for the PPP includes a $60 billion set aside for smaller lenders, including credit unions. This includes, of course, CDFIs and minority depository institutions. So this bodes well for Black and brown businesses' ability to access capital to help their businesses survive the crisis. Vulnerable populations are resilient, but they can't do it alone. We all need to do our part to ensure that they have a fighting chance. It's encouraging that credit unions across the nation have quickly responded to the COVID-19 crisis and are offering crisis assistance to ensure the financial well-being of their members and staff. These offerings generally line up with the sorts of products that vulnerable populations indicate will be helpful. These are just a few ways captured in a recent CUNA survey, but we know there are many more, including the SBA's Payroll Protection Program loans, which really aren't represented here. A shorter version of the survey is still active, so please fill it out. Even if you've previously completed the survey, we encourage you to complete it again so that you can share updates in your response. I've included the link to the survey on the final slide. So what more can we do to ensure that we're being responsive to the needs of vulnerable members and staff? Here are 6 ways to use diversity, equity, and inclusion lens to do just that. Number 1, know the pain points for vulnerable populations. For example, as I mentioned before, people of color are more likely to live in multi-generational households, work in vulnerable industries, and have a higher likelihood of job loss. The loss of a job has a ripple effect beyond the immediate nuclear family, making access to savings and emergency small dollar loans to cover expenses from housing to food to medical bills extremely critical. This is where having diverse staff that are members of the community you serve comes in handy. Tap them because they will have an understanding of the particular challenges your members are facing. Ask the right questions. When making changes to your organization, products, services, ask who benefits. How are we supporting the most vulnerable? Who might be harmed? What unintentional consequences should we be considering? That's number 2. Number 3, use an equity lens in your communications. If you have members who are non-English speakers, translate your COVID-19 communications into the relevant language and make it accessible via multiple channels. Coopera, for example, has developed useful COVID-19 related Spanish language resources for credit unions. A link to those are on the last page of resources, of COVID-19 resources that I'll share with you. Number 4, consider unequal access to technology. Some members may not have smartphones, tablets, or computers. This poses a barrier to their access to online banking and information about their credit union's COVID-19 response. We know that credit unions across the country have drive-through windows, ATMs that these folks can access, phone service, informational flyers posted on the credit union branch doors, windows, and these are ways in which you can help address this particular challenge. Practice inclusive leadership is number 5. This is going to be critical for your staff morale. This means creating a virtual community through regular check-ins where you listen to staff about how they're feeling, acknowledging their critical role on the front lines, reaffirming your commitment to keeping them safe, and asking what the credit union can do to make sure they have what they need to continue to serve members and remain safe. Finally, practice humility and create that virtual community and certainly self-care. We are living in a moment where there is no playbook, right? So connecting with others who are facing similar challenges may really help ease our burden. Recognize that uncertainty and moments of crisis are incredibly stressful. Make time to tend to your own physical and emotional needs. If you do so, that allows you to refuel and bring your best and most authentic self to work. Finally, I want to leave you with some of those resources that I mentioned earlier on. And just a message that our cooperative values, people helping people philosophy, our democratic structure really means that our success is bound up in that of our members. Ultimately, everyone is going to benefit when we work to support our most vulnerable. We are in this together. Stay safe and stay healthy.